All right, welcome back to Yahoo Finance Live on this Thursday morning. The conversation around cryptocurrencies and where they fit into traditional portfolios has continued through this year. Certainly the IPO or the direct listing of Coinbase brings a lot more focus, even increased focus, into public markets and how to think about cryptocurrencies. Last week's fundraise from FTX bringing even more capital into the space. Joining us now to discuss everything happening in the cryptocurrency space, Tom Jessop, the president at Fidelity Digital Assets. Tom, thanks for jumping on with us this morning. I'd love to start with just how you at Fidelity are thinking about this moment in cryptocurrency adoption, and from your vantage point as one of the largest traditional money managers, where crypto fits into the firm's thinking.
Yeah, nice to be with you this morning. So yeah, we see steady interest in adoption and really the emergence of this space as an asset class. Every year we survey a large number of institutions globally, and we look at a time series of how they think about the space year on year. We've done this for 3 years. And what's apparent are two things. This is seen as its own unique asset class with its own fundamental drivers, which differ from other financial assets. We see clients digging into those issues and really understanding not only the technology, but the application of those assets in their portfolios. And maybe most importantly, what we're seeing is continued purchase interest over a longer period of time. Something like 70% of respondents to the survey this year intend to have an allocation to digital assets over the next 5 years. And this is a cross-section of institutions ranging from family offices and hedge funds all the way through to much more traditional institutions. So we continue to see slow and steady interest and progress towards bringing this asset class mainstream.
And Tom, you talk about interest in owning more crypto assets or digital assets over the next 5 years. What is the hang up for a lot of folks you talk to at this point? Is it custody? Is it being able to explain it to their clients? What's giving folks pause, I should say, at this point?
It's funny. There's certain things where I think as an industry we've resolved the issues. So around the state of the market infrastructure, institutional service providers, whether it's from a custody or trading standpoint, I think we've done a good job of addressing those issues. A couple of years ago, there were concerns around, is there enough liquidity in the market? Are there enough service providers that understand my need as an institution? And the answer now is yes. We continue to see a few sticky concerns that investors have. One is clearly volatility. The other is, interestingly, what is the fundamental framework to value some of these assets? And it's interesting because in some cases, investors are putting a traditional lens onto an asset class that has a entirely unique and different set of fundamental drivers. And then interestingly, and also, well, maybe not so interestingly, regulation and regulatory clarity still is an issue for many investors who want to make sure there's a sound footing of regulation or at least a direction of travel before they commit significant assets to the space.
And Tom, on the regulatory front, how concerning were the comments this week from Gary Gensler to you?
I don't think they were specifically concerning. I think we need regulatory clarity. I think, yes, investor protection is an issue. Bringing this asset class up to the level of, the standard for stocks and bonds and other assets that investors purchase, that's important. And I don't think there's anyone in the ecosystem that would say that's a bad thing. Certainly based on our research, it's a good thing. The question is, what happens from here and at what pace? So we think the attention is positive. Even though there may be some concerning things that are said from time to time. But we and others are very engaged with regulators and continue to educate them on ways to bring this asset class into the mainstream and into a regulatory framework that captures a lot of the principles that apply to other asset classes, but importantly, focusing on the unique attributes of this asset class where there probably are emphatically there are no historical analogs for perhaps how to apply these regulations to what is essentially a new financial technology.
What would a fair regulatory framework look like to you?
It's a good question. I mean, clearly, let's just talk a little bit about what's going on this week. So with the infrastructure bill and some of the language in that bill, I think being clear about reporting and again standards that apply to other asset classes is important. But there's some unique language that talks about including folks that are effectively service providers, miners and other node validators into that reporting framework. And that doesn't necessarily achieve the same the appropriate objective. So we and others are working with regulators to try to straighten that out. But I think it's the same standards of investor protection, transparency, the things that have made the U.S. and global capital markets liquid and accessible to all investors, applying the same principles to digital assets, but again, taking into account some of the unique attributes of the technology.
And Tom, switching gears a little bit, I want to just talk about what you guys are doing at Fidelity in terms of beefing up this specific group. I mean, you worked at Goldman Sachs for a long time, made the move over to the crypto space, I think, 4 or 5 years ago, and it feels like the hot new thing. And really, as you go through the IB program, you say, what am I going to do next? It feels like crypto is now part of that conversation for folks who want to be, in markets and thinking about, kind of banking and finance longer term.
Yeah, I mean, I think it's the emergence of, we tend to think of this technology at a base level as a new operating system for financial assets or certain financial assets. And our intent to grow in the space and provide customers with access to these products is a long-term proposition. We think it will be core to our business and all of our client segments over the longer term. So call it current price activity notwithstanding, we continue to invest in building out an infrastructure that will allow us to be nimble and innovate and deliver services to our clients who want access to this new asset class.
All right, we'll leave it there. Tom Jessop, President at Fidelity Digital Assets. Tom, thanks so much for jumping on this morning.